The views and opinions expressed by the participants on this show are not necessarily those of Stewart Information Services Corporation, Stewart Title, or Stewart Insurance. Before you make any investment, you should seek the advice of your investment advisor or attorney.
Whether you're a real estate broker, realtor, homeowner, buyer, or seller, everything matters when it comes to real estate. This is Real Estate Matters with Stewart Title. Stewart Title's Bill Knapik and guests open the door to what really matters in owning, buying, and selling real estate. And now, Real Estate Matters with Stewart Title, brought to you by Stewart Insurance. Here to inform, entertain, and inspire, Bill Knapik.
Welcome to the show. It is Real Estate Matters with Stewart Title. I'm your host, Bill Knapik. That's right. Thanks for joining us. It was a wonderful holiday weekend. The best wishes to you and yours wherever you're listening. Certainly right here in Houston, Texas. We remind people to go to stewart.com/radio. Stewart.com/radio. That's right. In case you want to check out the show again, see the guests, see the YouTube video, or go to past shows. It's easy. Stewart.com/radio. Let's get down to business as we welcome Claire Barber. She's the principal attorney at her firm called Barber Law. Claire, welcome to the show.
Thank you, Bill. I appreciate your invitation. Honored to be here today.
Well, we're excited to see you and to hear a little bit about your profession and what you're doing in the real estate world, especially in mortgage law. So let's tell people, Claire, about your firm.
So Barber Law is a women-owned and managed firm here in Houston, Texas. We provide comprehensive document preparation services and general legal counsel to mortgage lenders and title companies throughout Texas. In Texas specifically, we have a statutory requirement that our clients must use a licensed state attorney to prepare or review loan documents or any legal instruments related to the transfer of title. So we're talking warranty deeds, deeds of trust, promissory notes, releases of liens. So that is really our specialty and expertise.
So much fun stuff.
Oh, yeah. All the time.
Well, let's tell people, and I love your website because the catchphrase is on there. Let's tell people how your firm raises the bar in your profession.
Yes, thank you for noticing that. I'll have to give a quick shout out to my mom because I'm sure she'll be listening. But that was something she came up with, and I just love it because it really encompasses who we are as a company. We understand the unique challenges of lending and just real estate law generally in Texas. And so I wanted to create Barber Law on the foundation that we were going to provide exceptional service to our mortgage lender clients and our title company clients. So what does that mean in practice? It means that we are approachable. We believe that people should come first. I think a lot of times in real estate, the transaction is just centered around, the formalities and the transaction itself instead of the people. So my goal was to remember that people are at the center of every transaction, and that's something that we try to keep at the forefront of everything we do. We also looked at the whole process of what we do in serving our clients and tried to come up with processes that made our services more affordable, more secure, more efficient. And so that's part of, our core values and how we raise the bar in mortgage law.
And let's define for those that aren't as familiar with mortgage law as you are and your clients are, but give people an idea of mortgage law. When does it come into place, and what are the elements and considerations in mortgage law?
Yeah, that's a great question. It's actually something they don't teach you in law school. I often joke with people that no one ever taught me who Fannie Mae was. In fact, I didn't learn that it was actually a GSE until I went home after the first day of work and Googled who is Fannie Mae. But mortgage law is really for us the intersection of real estate law and corporate or business law.
And also, as far as we look ahead, here we are the last couple weeks of the year, and I understand you do have a crystal ball. We were wondering and waiting for a guest to have one. So let's tell people, as you look ahead in 2025, what do you see in the lookout here?
Sure. So it's a very exciting year. The 2025 Texas legislative session is upcoming. I think it starts on January 14th, so we're definitely looking forward to that. Today, I did write down before I came here to the show this morning, there have been over 2,200 bills filed. So we expect a very exciting, fast-paced legislative session upcoming. Some of the hot topics that we're seeing in real estate right now would be home equity lending. There was a bill refiled from the 2023 session that covers where a home equity loan can close. It's always been a constitutional requirement that it close at the office of the title company, the lender, or an attorney at law. The issue is that sometimes you'll have someone, a borrower, who is either disabled or maybe incarcerated and can't make it to the closing at one of those 3 locations. So we have seen a bill refiled on that this session. I also expect to see some very interesting progress with foreign ownership. For the listeners who maybe haven't experienced or heard much about this legislation, in 2023, there was a push for a bill that would restrict who can own land in the state of Texas. And they really defined it as hostile countries. Think North Korea, Iran, Russia, China. We've already seen 7 bills filed on that legislation this year. We expect to see more. So stay tuned on that. And another hot topic I'll just mention briefly is artificial intelligence. We expect to see it have some impact in mortgage lending. And I think the same will be true for the title underwriting process, maybe even real property records. So that'll be interesting to follow in the coming months.
Fascinating things. And just it's interesting that you look at the year from a legislative session kind of idea, and most people don't, but that's why we hire you when we need help. And in that idea, people that are in the mortgage profession and the title profession, what are the things that they should look for when hiring a company like yourselves to make sure that they get the right representation and they're hiring someone as awesome as you are, Claire Barber?
Thank you. Yeah. So, I mean, a law firm provides a service, right? And so when you're going to hire any type of service, I think you should hire the service that is best for you. And so what does that mean for me? I think lenders, title companies need to look for the law firm that provides the best service for them. And so we're very forward thinking when it comes to technology. We train our staff and our team to be problem solvers, to pick up the phone, to ask questions. And again, at the end of the day, it's all about serving our clients and providing exceptional service.
And when we think about your clients from a geographic standpoint, Claire, what are the areas, where do you work specifically? You're certainly right here in Houston, Texas, but how far do you go out?
We serve all of Texas. I would say about 80% of our business is Texas focused, but we do work with lenders and title companies nationwide.
And also in giving back, you're also active in the community, I understand. Let's tell people some of the things you're doing there and how you're connected.
Yeah, absolutely. The mortgage industry has been so good to me. And so I really strive to give back where I can. And one of those ways is serving on the board of the Houston Mortgage Bankers Association. It's funny how now today some of my closest personal friends are people that I met professionally. And those 2 areas of my life have really just merged. Most recently, I would share that we had a holiday party for the Houston Mortgage Bankers Association group, and we were able to raise money and pick a charity here in Houston that we were able to support with the money raised at that event. And so I'm just really proud to be a member of the HMBA and even Texas Mortgage Bankers Association as well. I would encourage any listeners that are wanting to get more involved in the real estate or mortgage industry to get involved in one of these local associations, state associations, same thing with the Texas Land Title Association. I know that's a great group over there. It's a great way to get connected, and they're very unique, special groups. And
Claire, of all the things you could be doing, here you are in the legal profession, especially helping in mortgage law. But what was it that inspired you for this to be your profession?
Oh, goodness. Well, I graduated law school in a year that there wasn't much going on in the job market. And so my first interview ended up being the first job that I took. It was in the mortgage industry. And, it's funny. People have always said you either are born into the mortgage industry or you somehow accidentally fall into it. And so I guess I would be part of the second category. But I can't imagine myself, anywhere else. I think throughout my childhood, I was raised in a family of 4 girls and was always told that I was a great arguer. So I thought the legal industry and being an attorney was my route. And so just thrilled to be in the mortgage industry and where I'm at today.
Also in the real estate profession and in real estate transactions, as you were talking about things that are upcoming, there are so many details to a transaction. So I would think those elements keep you busy. But going back to the AI, tell us a little bit more how you think that's going to unfold, because we've never heard so much. It's been around, but we've never heard so much about it since in the last 6 months, it's been incredible how much we
Right.
hear about AI.
Right. And I think that's it's really broad, right? We have AI we're talking about. We have cybersecurity issues we're talking about. We have blockchain. I was fortunate to serve on a blockchain work group back in 2021 and 2022 and actually studied blockchain for the state of Texas and figured out how Texas state agencies, companies could use blockchain and AI to be more efficient, to offer better services. And so, who knows where it'll go. I think in the mortgage space and also real estate, we'll see it in improving our processes. I hope not, taking away jobs, but just making us more efficient in what we do. We hear a lot about the cost of home ownership being a huge expense to borrowers and a challenge, a barrier to entry, a barrier to home ownership. And so if we could take AI and use it to improve our processes to decrease some of those costs, I think it would be a win-win for both the companies and the borrowers, the consumers that we have the honor of serving every day.
And you mentioned blockchain real quick. As far as an easy definition, for those that don't know, let's define blockchain.
Oh, gosh. Well, I like to think of it as magic. So, it's a decentralized ledger that is basically a form of storage of data. And the best thing about it is it's transparent. And so everyone that's ever been on the blockchain can see what the ledger holds, what's coming in, what's coming out. When I served on this work group that I mentioned earlier, I was in charge of the record keeping systems, which for the state included real property records. So if you think of it in that context, being able to see who initially owned a property, where it's been transferred along the blockchain, any mortgages or liens that may be on the property, it would all be stored on the blockchain. It'd be publicly accessible, but also a very secure way of housing data.
So awesome to learn about things like this. We're talking with Claire Barber. She is the principal attorney at Barber Law. Claire, before we close the segment, what else do you want people to know?
Like I said, I think getting involved is very important. We love serving our clients, our mortgage companies and title companies here in Texas. I'd love an opportunity to work with our listeners. Please feel free to reach out to me. I'm very active on LinkedIn. You can find me there, Claire Barber, or on our website, barberlawpllc.com. Please send me a message, give me a phone call, reach out. I'd love to hear from you.
And the website again is?
barberlawpllc.com.
And your phone number, Claire, is?
713-324-8060. 713-324-8060.
Thanks for being with us.
Thank you so much, Bill. I appreciate it.
As we continue, let's talk to Mike Brubaker. His company is Brubaker & Associates. He is the president. Mike, welcome to the show.
Thanks for having me, Bill.
Well, here we are. You are a legend right here in Houston, Texas. Brubaker & Associates. I've seen you at many talks sharing information about your company and the appraisal itself. But let's tell people, Brubaker & Associates, about your company.
So we're an all-purpose real estate appraisal firm. Real estate appraisal, what we do is we value properties. We provide an opinion of value, and folks say, well, what all can you appraise? I tell people I appraise anything that sits still long enough. We don't do cars. We don't do art, that kind of thing. But if it's real property, we appraise it. We don't do big commercial things. There's other firms that specialize in that, so I don't do that. Most of our work is residential and sort of the farm and ranch and all these small sort of mom and pop business buildings, that kind of thing.
And I'm glad, as you mentioned, farm and ranch and even commercial, it's interesting that when we think of appraisal, there are so many different type of things to appraise in your world.
Oh, my God,
it has to
yes.
be very interesting.
Yes. And even within the residential arena, you've got everything from, years ago we appraised a building. It was the Texas White House. A lot of folks say, well, we want 3 comparable sales. That's how you figure out what something's worth. We have so many properties we've appraised. There's nothing like it. And that's really where we get an awful lot of calls. A lot of my referrals really come from other appraisers. Somebody will call me and say, well, we have something we need an appraisal on. I said, well, where'd you get my name? I said, well, I called so-and-so. He's another appraiser. He says, no, we don't do that. You need Brubaker. So we've done this a long time. We've a wide variety of things.
And when you say a long time, I was just about to say how many years, because it's quite a few.
It's a few. It's 42 years.
All in Houston, Texas.
All in Houston. We opened up Brubaker & Associates in 1988, but I started appraising prior to that. I have no desire to retire. I really love the business. So my suspicion is 10 years from now, we'll be saying I've been doing it for 52 years.
And who are the people that call an appraiser? Just as someone is listening out there in the real estate world or otherwise, when do we call an appraiser? And typically, who is the person that makes the call to say, hey, we need your services?
Yep. There's basically two different groups here. If you're buying a home and getting a mortgage, the lender is going to choose the appraiser. So the lender's going to choose. The buyer's not going to be able to call me. The seller's not going to be able to call me if the purpose of the appraisal is for mortgage lending. If the purpose of the appraisal is anything else, and some folks don't understand this because they've been told they're not allowed to pick an appraiser. But, we do all kinds of appraisals for divorces, things that aren't necessarily happy, estates. We get a lot of calls. There's a large number, and I don't know the exact number now, but it's 20 some odd %, maybe higher than that, where our purchases are cash purchases these days. And even those buyers will come to us and they'll say, I don't mind paying $50,000 too much for a house, but I don't want to pay $300,000 too much for a house. So they'll get an appraisal. We'll get sellers that will want an appraisal because they don't have a clue what their property's worth. Towards the really ugly side, we do an awful lot of litigation support. And that's everything. And this becomes very, very complex sorts of appraisals. These are appraisals that take months long and are infinitely more expensive than a standard appraisal. But construction defects, we've done things. Title companies miss something, easements, toxic wastes, hazardous materials that are left on properties, some pretty complex stuff. So we get into all that too.
Always interesting, Mike. I mean, just as you describe it, there's so many different configurations and things that you're approaching every day.
That's why I love it. Because it's a problem-solving business, and for an awful lot of the properties, it's a unique problem. Now, there's you could say, well, in a subdivision out in Katy, all the homes look alike. That's pretty easy to appraise. And I agree. If you're just appraising for a value as of today, but we got a call the other day, true story, it's for an estate, and I don't know how they hadn't figured this out, but they need a value of a property as of date of death, and that was in April of 2004. So we get an awful lot of that, where as of date of death, and they didn't know they needed it, and whether it was their tax attorney or CPA or maybe even the IRS says, we need this value as of date of death. Technically, they call that a retrospective appraisal. We do that all the time. It's a normal part of our business.
And going back to, as you said a minute ago, about the cash buyer, if I'm a cash buyer and I want to get an idea of the value of the house, if it's worth what they've accepted, maybe, I guess, during the option period, that cash buyer can call you and you can go look at the property.
Oh, absolutely.
Is that a common thing?
You know what? It's very common. I think people want somebody else's opinion because the purchase of real estate is very, very personal. And some folks say, I want somebody to look at it from a professional level. I love the house, but again, I don't want to spend too much money on it. So we get those calls quite a bit, yes.
In fact, as you're describing that, I'm thinking someone maybe from another state that doesn't even have a feel for what's going on here except just a little bit, that could be of even extra value to someone like that.
Absolutely. I don't know if you recall, but during COVID, we had people buying homes sight unseen.
That's right, yeah.
Sight unseen, and they were coming from different states, and what they had was videos that were done by a realtor or somebody, and
right.
We'd get calls from out of state. Yeah, can you go by and give us an appraisal on this property? Absolutely.
Really would come in handy. Two situations or configurations. Let's say a, quote, normal house with a regular lot, 2,500 square feet, in a neighborhood, not all real tight, but a little bit of elbow room. Mm-hmm. The mechanics of the appraisal, how long would something like that take? And then give us an idea of, let's say, a typical, quote, farm and ranch appraisal. Yep. How long would that take?
So,
how do you do it?
You measure it in hours, but it usually ends up taking days. I think a standard appraisal report on a typical home in a typical neighborhood, you're about 8 hours in total work. But the reality is by the time somebody calls us, then we have to arrange appointments to get out and see the property. And if it's for a mortgage loan, then we're probably working with a realtor or a seller to get out and visit the property. So now their schedules and our schedules have to mesh. So when it's 8 hours total, but you're probably going to be 3 to 5 business days before it's actually done and ready to be delivered. On the farm and ranch, the answer to all appraisal questions is how hard is it? How much does it cost? Well, it depends. It depends.
Right.
And I've said that for years. I've made a good living saying it depends. Made a real good living calling myself appraiser extraordinaire too. And after saying it for 40 years, there's 3 or 4 people that believe that. But a farm and, once you get into ranch properties, and let's just imagine something that's give or take 1,000 acres. Now you've got soils, grasses, farm animals. We don't appraise the animals, but the land, the soil has to be appropriate for whatever need that buyer may want. If you're down in Matagorda County, that's cattle and rice. If you're out in the hill country, that's more likely to be horses and gentleman ranches. And if you're way out in West Texas, that's hunting. So those things are going to take, I would tell you, 10 to 15 business days from start to finish usually.
And on the extraordinaire moniker, let's tell people at least 1 or 2 things which make Brubaker and Associates in that league.
I'm just going to say experience. I have the highest level of certification that's offered by the state as a real estate appraiser. The requirements to get that certification take about 2 years. And I was actually an appraiser before we had state licensing and certification. None of that existed back then. So what you had to sell was your customer service, skill, knowledge, ability. But over time, it's the experience. You've seen, and you've never seen everything. Trust me on this. I learned something new.
Keeps you going, right?
And that's, again, part of the fun.
Exactly.
But you learn something new every day. So all of our appraisers, I'm 69 years old, 42 years experience, and still loving the business. Most of the appraisers in my shop look just like me. They may not, some of them have over 40 years experience. We've got 2 folks over there that have been around longer than I have, but they're all 20, 25, 30 years of experience.
We're talking with Mike Brubaker. He's the president of Brubaker and Associates. Mike, as you look ahead, you and the team at your company look ahead to 2025, what are you seeing that's before us here in this next year?
So for us, it just gets more and more interesting. Again, the phone calls on the really strange stuff, the litigation support, the unique properties. Relative to Houston in general, I think we're going to have a phenomenal year. I think people are finally, 2% and 3% interest rates were artificial rates. They should have really never happened, but I'm not going to get into that. I bought my first house in the mid-'70s. I paid 8 1/8%. That was my interest rate, and was happy to get that because it was going up to 8 1/4. And by 1982, it was 18% was the standard rate for a mortgage loan. We're in at whatever you want to call it these days, 6 to 7%. That is a great interest rate. It's a very normal interest rate. And I think people are finally acclimating to that. So as people acclimate to a normal interest rate and kind of get back into the market, I think overall we're going to do very well. We continue to generate jobs here in Houston. It's one thing this town does very well. We will probably, I've listened to an awful lot of economists, we're going to generate between 55 and 75,000 jobs in 2025, which means they all need homes.
No doubt about it. Mike, let's tell people how they can reach Brubaker and Associates.
Okay, phone number 713-464-4666, 713-464-4666. Find us on the web. If it's BrubakerAMC.com, or if you just Google Brubaker Appraiser, you're going to find me.
It's going to come up. Thank you so much. One more time, the phone number, Mike.
713-464-4666. Talk to one of the four lovely ladies that answers.
Mike Brubaker. Thanks for being with us, Mike.
Thank you, Bill.
And speaking of money, here he is, Paul Vincent with Prime Lending. Hey, Paul, welcome to the show.
Why, thank you very much, Bill, for having me.
Well, first of all, let's tell people about Prime Lending.
Yes, sir. So Prime Lending is a national lender. We are owned by Hilltop Holdings. We are a three-legged stool, so to speak. So we are Prime Lending, Plains Capital Bank, and Hilltop Securities.
And your role at the company, Paul,
So I am a mortgage banker and have been for, it will be 31 years in March.
That's awesome.
Yes, sir.
So you've seen a lot of interesting things in the lending world, and you've seen a lot of changes, I would think.
I have. I've seen rates in the ones, and I've seen rates as high as the nines. So the one thing that's constantly changing in the mortgage industry is change, and that's guidelines. What people qualified for back then may not qualify for today, and that's the one great thing about Prime Lending is that we have a product for just about almost anyone. And outside of someone with damaged credit, we've got some creative mortgage products where we don't use tax returns. We'll use bank statements. We'll use deposits to qualify. We'll use asset depletion for someone who's got money in institutions but doesn't have income reported on the tax returns. So it's a whole new world. It's certainly not subprime back in 2008. These are for well-qualified, credited borrowers.
And we hear so much. I mean, we are always hearing about interest rates, right? And even as we record today, a few days from now, there's news that could be transpiring.
Absolutely.
So give us an idea what you think in terms of, we hear people saying the rate's going to come down. Well, give us an idea what you think's going to happen. Is it going to come down? And is it going to be a significant drop if you feel that way?
Perfect. Yes. Thanks, Bill. So great question. So we are in what is very unique right now. When the Fed made the first rate cut back in September, when they cut the prime lending rate 0.5 point, rates went up. When they did the next rate cut in November, the rates went up. And so it is believed that the Federal Reserve will lower the prime lending rate by 0.25 point. But if we look at history over the last 3 months, we could see rates take a slight bump up. It was believed that we were going to see 6 to 8 cuts next year, and that has been whittled down to maybe 3 at best, 4 rate cuts in the new year. I think the big key is inflation is not as low as the Federal Reserve wants to see it. We're hovering around 3.3. And we've got some federal debt that's going to come due next year. You've got investors looking at going into mortgage buying, where you could have foreclosures, you could have late pays, or you could buy federal government debt where you're going to be paid. I think rates where they are now in the mid-6s will become a welcome trend, if you will. I don't think we'll see rates go back into the 7s. I think if we could see rates go under 6, hover in the mid-5s, then we'd see a lot of activity stir. There's a lot of pent-up demand. You've got people in low rates. I know I'm in a 15-year at 1.875. So if you had people who are in those low rates but don't necessarily want to be in the home that they're in, when we get rates that are maybe 3 points higher as opposed to 5 points higher, then we'll see that demand come up.
It's interesting that you said the 5s, because you might have been reading my mind. I was thinking of the number 5, and then as I thought about talking with you, I think the number 5 seems like that's a number, and you mentioned pent-up demand.
Yep.
It seems like that's a number that could really start a stir, so to speak.
Absolutely. And so I know rates, again, right before the Federal Reserve met in September, the 30-year fixed rate had fallen to 5.6 625, so 5 5/8, and the applications had ticked up tremendously. So right now we're in what's called a buyer's market. So you've got a lot of inventory sitting, and so you've got sellers competing against themselves, meaning they're lowering their price because they're not getting enough showings. I think when we get rates below 6, we'll see a lot of that demand kick off, not only for people who are sitting on the fence waiting for rates to fall, but people who are in mortgages right now that just want a different home. But you've got the people that say, well, I'm going to wait till rates fall. And waiting till rates fall, yes, you're going to get a lower rate, but will you pay higher for the home? And that's what I believe will happen is when that pent-up demand kicks off, it becomes a seller's market, sellers will be able to ask more for their home.
Well, rates.
Yes.
In fact, I had someone ask me over the weekend. I work for Stewart Title. I'm a title company, but I'm in the real estate world. And I had someone just ask, hey, well, what are the rates going to do? I'm like, I have no idea. But I said, my guess is maybe the 5s. But I'm not even in the mortgage banking world. You are. How many times a week is someone asking you, what are the rates going to do, or what are the rates?
Over and over. And in the world that we live in, news gets displayed or carried across in different channels. But when the news finally advertised rates have fallen, it's 3 or 4 days after they actually fell, and the market's probably repriced for the worse if we go back into current history. So, I think with the new administration coming in with a pro-business model, you're going to see a lot of investors starting to get back into the market where they'll be, cautiously pursuing investing into real estate, which could possibly lead for a more dynamic mortgage rate into the 5s.
We're talking with Paul Vincent. He is with Prime Lending. What are some of in terms of down payment, regardless of what the rates are, give us an idea what you're seeing, say, in the last 10 loans that you're serving people with. What kind of down payments have they put down on average, if you would?
So on average, my client base typically will do anywhere between 10 to 20%. But again, if you're a first-time home buyer doing a conventional mortgage, you can get in it with as little as 3%. But there's a lot of down payment assistance programs out there, literally, that you can get into a home with no money. It is a unique time to be pursuing a mortgage, and I will tell you. And if you've been told no in the past, I think you should revisit that because guidelines have changed, and they've changed for the positive, not for the negative.
Give us a word about down payment assistance. I would guess you would know, but there may be people that don't even know that there is a down payment assistance.
Sure.
How does it work?
So down payment assistance is based off of the loan amount. So if you're borrowing if your loan amount's going to be $200,000, you can get up to a 5% down payment assistance. So that means we would give you $10,000 to go towards your down payment. Your minimum down payment would be $6,000. So the $10,000 gets divvied up between down payment and closing costs. You can then even add seller concessions to where the would-be buyer brings no money to the table.
So many things. And so when you're helping an individual or a family, a couple, there's so many things to help tailor their situation so they make the right moves mortgage-wise. So you're counseling a lot, I would think.
Absolutely. And one of the ways to get around high interest rates right now is if you've got a seller who's got a home that's been sitting on the market, rather than the seller reducing the price of the home, we can have the seller pay what's called a temporary buy down. So you have what's called like a 2-1 temporary buy down. That means for the first year, the rate's 2 points lower than the locked in rate. Year 2, the rate's 1 point lower than the locked in rate. Years 3 through 30, it goes to the locked in rate. So if you lock in a rate today at 6.5, your first year, your rate could be 4.5. Gets that payment down, but it's not costing you money. The seller's paying it.
And Paul, you've been in the profession over 30 years. What is it that keeps you excited about it day in and day out?
Well, it's the pleasure and the honor of getting people into a home. That is fulfilling. But The industry, every borrower is different, and the industry has so many guidelines. So it's taking what that borrower's story is and finding a product that fits their needs and getting them into their dream home.
And what else should people know as they may not buy a home every 7 years, whatever their situation is? If they haven't purchased a home in a while or borrowed money for a purchase, what should they know now at the end of this year, the very end, and looking ahead for next year? What should they know in terms of being ready to do the process?
So, yeah, one of the biggest benefits is making sure that you're pre-approved for that mortgage. The last thing you want to do is go out and find the home of your dream and only to find out that you don't qualify. So when working with a mortgage lender, you want to first start off with, a soft credit pull. There's no reason to do a hard credit pull and ding the borrower's credit score. Let's look at that credit. Let's say maybe they've had a little bit of a challenging year or two. They've gone through some life change, and we've got to work on their credit. We can do what's called a rapid rescore, where we take their current credit and we rescore it in as little as 5 business days and bring their score up to a more desirable level, which will obviously benefit their interest rate. So again, it's getting pre-approved first and foremost. Let's let yourself know what you're qualified for, and it's like a blank check when you go out and start looking at homes.
Paul Vincent, Prime Lending. Right now, people are out there and they say, I think I want to call this Paul Vincent with all these years of experience to help me and or my family secure a loan. What should people do, Paul?
Yes, you can call me at 281-827-1139, or you can email me at paul.vincent@primelending.com. 281-827-1139.
Paul, thanks for being with us.
Thank you, Bill.
Real Estate Matters with Stewart Title would not be possible without our partner, Stewart Insurance. With a focus in real estate and a special focus on real estate brokers, Stewart Insurance creates insurance plans to address the risks facing our industry today. They invest a significant amount of time helping real estate broker owners offset and manage their risks. Here he is once again with a very important and sought-after insurance segment, John Bramlett with Stewart Insurance. John, welcome back.
Thank you, Bill. Always a pleasure.
Well, here we are. What an array of interesting things that we've already talked about so far, and yet the icing on the cake somehow is always insurance.
Well, this has been great because this has been a friend's show.
It has, and we'll tell people you are many things, but today have been the casting director to assemble these giants in the industry.
Yeah, so Mike and I have known each other for quite a number of years. Both active with the Houston Independent Real Estate Brokers Association, and we're both on the board of the Houston Mortgage Bankers Association, and that's where I met Claire, and Claire's become a friend, and really enjoy working with her. And then Paul is a new friend, but he was introduced to us by our friend Pam Eastwald, who we both know and care a lot about. So it was really exciting that today was truly a friend's show.
It came together masterfully. You put it together in a super way.
Well, it was fun, and it's always nice to be with folks that not only you enjoy being with, but respect as professionals.
It's interesting too. I know the listeners love to hear the insurance segment, but I bet your guests that you've assembled today, their second motivation was to say, I want to hear what John has to say.
Exactly. I know Mike mentioned that.
Claire's shaking her head.
Yeah, Mike mentioned that several times that was important to him.
Yeah. So
today we're going to talk about intent, and that intent is important when we're talking about insurance, because it's important that we understand, whoever you're working with, your insurance advisor, whether it's with your personal insurance or for your business insurance, that your advisor understands what the intent is that you have for your coverage. And the intent also is important to understand the intent of the policy, because an insurance company, each policy has a different intent based upon how it's written and who it's going to be serve, who it's going to serve. So if we can take the intent of the insured, the consumer, and then look at the intent of the insurer, the insurance company, and we can match those two together where they make the most sense, then we'll have a client that's properly insured. And everybody's definition of that is different. that it really is what your coverage you need at this time in your life, whether it be for your personal insurance or your business insurance.
No doubt. Those two things must be in proper alignment, and the associates at Stewart Insurance do that in a tremendous way.
Well, we do. I mean, it's important to understand. I mean, if it's a first-time home buyer, their intent would be, I need to have coverage in order to get my loan. I need to have that right debt-to-income ratio to get my home. And that's fantastic, and we can work with that, work with them on getting a plan that's affordable. And as their family grows or as their needs grow, as their home grows, then we can work with them on adjusting those plans to make sure that maybe at that point they need more robust coverage. They have a bigger home, or they've got more personal property. They have another car, or they have more drivers. And we can take all that into consideration, whether it's building up or if they're downsizing. Maybe they're downsizing and they don't need as much coverage, or they do have some cash in the bank. So maybe we look at higher deductibles, lower premiums to make it more affordable, because the individual can afford to cover some of those issues on their own before they would file a claim with the insurance company. So, we're going to look at that from a personal perspective, but we're also going to do that from a business perspective, because, again, the intent of the policy depends upon the company itself. There are some policies that are very generic, and they can be generic for somebody that's in a general industry. But if you're in a specific industry, like everybody that we have on Real Estate Matters that deals in and around real estate, you want to make sure you have a policy that's written. The intent is to insure those that are in the real estate world. So the language they use, the type of things that they'll coverage, the type of services they'll coverage are very specific, where in a general policy you won't see.
And things are ever changing. In fact, John, I know a guy that had 2 cars. He took those 2 cars that were insured, of course, traded them in for 1 car just so he'd have more room in his garage. Can you imagine?
No, I would love to have that opportunity. Yeah. That would be fantastic.
You're talking to that guy.
Yeah,
you figure that. Right?
Yeah. I wanted to be that guy and get that Porsche 718, but we'll work on that.
I'm just glad to have more room in the garage.
So, which one did you keep?
I didn't keep. I traded in 2 cars, and I got a whole different car. Okay. And you know what? Not that you care, but it is kind of fascinating. Of all the car transactions I ever had in my life, I walked away from the car dealership not paying a dime. It was even. I traded 2 cars, got a brand new one, and didn't pay 1 cent. And I love the car.
It's
crazy.
Bill Knapik negotiations. Maybe that'll be our first show in January.
It's a longer story.
We'll introduce the Bill Knapik negotiation techniques.
But it blew my mind. Anyway, so
that's fine. But it is important, and make sure that you get that new car properly insured.
But there you go. Everybody's thing changes, whether it's home, cars, like you mentioned on other shows, watercraft. We have to be ready and be nimble and know what our insurance needs are.
That's right, because it really is. It's the intent of the coverage. So if we're helping somebody with professional liability or errors and omissions coverage, the intent of the policy should be just for that. So in case somebody feels like you did not do your job as a professional, you've got some defense costs and some potential settlement claims. What you want to avoid is sometimes we'll see multiple coverages piled into one policy. And while that's convenient and it does provide some coverage that maybe you wouldn't have had previously, the problem is if you get a claim against one of those other policies or other areas of coverage that are lumped into that policy, it does affect the liability limit of the mainstream coverage, and then it could affect the insurability down the line. So again, understanding what that intent is of the policy, understanding what the intent is of the individual or the business, that allows us to then find the right coverage for that individual.
And I'm so glad you brought up the word intent today, because it is a great theme. But one of the places the intent occurs is when you're on the phone, and people can actually call Stewart Insurance. When you're on the phone, it becomes communication. So when you talk about your needs, your intention, and that the trained people at Stewart Insurance, when they hear that, they're experts at knowing and asking the right questions. Thus, the communication takes place, so away we go to being properly insured.
Well, I mean, Claire mentioned it specifically, and Paul and Mike also spoke about it. That's really our point of difference. I mean, we're not the only company that offers the plans and the policies from the different partners we have. There are other independent insurance brokers out there that work with the same companies that we do. Now, there are some situations on the business side where we have some unique coverages that not everybody has access to. However, the big difference are our advisors and the ability to take the time to ask the right questions, the ability to understand there are things that you can do to minimize that risk so that when we do write coverage, the premium could be a bit more affordable. Or in some cases, the things that you need to do in order to minimize that risk in order to get coverage. So being willing to have that conversation and work with somebody that's going to take the time to make sure that you understand that and that takes the time to be an expert in real estate. And that's our mission, is to be the insurance resource for real estate. That makes all the difference in the world.
Well, John, fascinating stuff. What else should we know?
Well, if you would like to be properly insured, whether that be as a family or an individual for your home or your apartment, your investment property, your car, watercraft, we're able to help you out, and you can reach us at 866-798-2827. On businesses, we work with law firms and title and attorney agents, property management firms, realtors, and real estate brokers on their business insurance, errors and omissions, cyber liability, general liability, workers' compensation. You can also reach us at 866-798-2827, and we'd be very happy to help you out.
John, the number again is?
866-798-2827.
Thank you so much. John Bramlett with Stewart Insurance.
Thank you, Bill.
And she's back, Claire Barber with Barber Law. Claire, welcome back to the show.
Thank you so much.
Well, here we are winding down the show, the last few minutes. What else do you want people to know about what you're doing and how you're helping people at Barber Law?
Yeah, absolutely. Just after hearing John speak, I'll just hit on this one more time. Relationships matter so much in this business. Just like we talked earlier about our slogan, raising the bar. And so I'm thankful to John for the opportunity to be here and the relationship with him. Excited to have a relationship with you now, Bill, and get to know you.
New friends are made every day right here.
I love it. This is great. I hope to come back again one day and tell you more about the firm and how much we've grown looking back in a couple years. So I appreciate it.
Well, give us an idea. Whatever profession someone's in, you're in something that has a lot of complexities. And as you said, like everybody in the real estate profession, building relationships is so important. But a lot of details go into it in addition to the building relationships. But how do you stay balanced? How do you keep your mind in the right mindset to be able to do so many complicated things,
Sure.
build relationships, and put that all together as you say, hey, we have a new year and you're all revved up for that. How do you put that all together? What are your keys to success? A few of them, if you would.
Yeah, absolutely. So just the entrepreneurial spirit, it's something that I'm very thankful to have. You know, just having that grit and that tenacity, the problem-solving mentality, like I mentioned earlier, has been super important for us. I think that's part of why the firm has been so successful. You know, January will be 2 years since we opened, and I look back and think of how far we've come and where we're headed into 2025. But I also think just surrounding yourself with the right people. I have great mentors. I have great coaches, great colleagues. I could just go on and on about all the people who have supported me in my journey. And so, you know, it's like they say, so you're most like the 5 people you surround yourself with. And I really buy into that. And so I really am just truly thankful to be part of this industry.
Very inspiring.
Thanks.
Now, outside, if you have any spare time when you're not in the world of mortgage law at your law firm, Barber Law, what do you do to unwind or relax? If
Unwind. I'm a runner. Yes, I am a runner. My husband and I enjoy traveling. We have a 3-year-old Havanese puppy, which is organized chaos, I like to say. But we try to, finding that work-life balance is a challenge. As everyone knows, especially post-COVID, I feel like. But, just try to use that time to be together, be with family, nieces and nephews, and it's just great.
And the Havanese puppy,
yes.
You described a puppy, so it's still in training, I would think, right? It takes a while from the puppy standpoint.
It shouldn't, but, I kind of slacked on the obedience training at the beginning. I will take full responsibility for that. But it's funny you mentioned the website earlier. He's even mentioned on the website. So, Buzz Barber, he's, my pride and joy.
I was going to ask you his name. His name's Buzz.
Yes, Buzz.
You might be listening to the show. The tails
are wagging.
That's right. We know that dogs, when they hear the show, the tails wag even more. It's been scientifically proven. Well, Claire Barber, thank you for being with us. One more time, let's tell people how they can reach your firm.
Yes, please connect with me, Claire Barber, on LinkedIn. Send me a message. You can also find me online, barberlawpllc.com, and there you'll find my email and the firm's phone number. Please reach out. I'd love to hear from your listeners.
Easy name to remember, Barber Law.
Raising the bar.
Raising the bar. Thank you, Claire. He's back. Legendary Mike Brubaker and Associates. He's appraising everything, probably appraising us as we've done the show. And welcome back, Mike.
You get high marks.
Thank you so much.
Worth every penny.
Well, as you're here and winding things down, what else do you want people to know about what you're doing there and or what's coming in the year?
You know what? It's not so much what we need people to know about us. I think I'm going to encourage everybody in any business, but particularly in real estate, and I think Claire mentioned it, and it's been mentioned a few times, relationships. Get started giving back early. Claire's a perfect example. She's owned her own business for 2 years, sits on the board. I sit on the board with her at the Houston Association of Mortgage Bankers. I sit on the board for about 4 or 5 local organizations. I'm a board member of a national organization of real estate appraisers that specialize in complex appraisals. But also, I love to give presentations, realtor presentations, any kind of group. And I tell people, it's a give back because all of us, whether you're insurance, attorneys, mortgage lending, realtors, we all have to interconnect one way or another. And nobody really needs to know my business at the level I know it, but they should know some of the basic functions of that.
And that's how I knew of you years ago, as seeing you at a presentation. So people, you're saying, can give you a call, give your company a call, and then bring you at an event or something. How do they do that, Mike?
I love to do that. So 1, they can call me, or 2, just reach out. Our website, BrubakerAMC.com or BrubakerAndAssociates.com or HoustonAppraiser.com. Usually if you Google me, you're going to find me pretty close here. Yes, sir, 713-464-4666. Give us a call. I'd love to talk to you. 713-464-4666.
Thank you, Mike. He is back. Paul
Thank you, Bill.
Vincent. Mr. Vincent, money is the lifeblood of real estate and pretty much everything else.
Absolutely.
A final word about your work.
Well, again, I think rates are still doable, and I think if you're in the market to buy a home and you're hesitant about buying, remember you can always refinance, and it would be easier to save $200 a month than pay $50,000 more for the same house you want. I would definitely recommend anyone in the past who's been turned down because of a unique situation they have to reach out and contact me. I'd love to have another look at it.
Because things change, and with your knowledge and the years of experience, you'll be able to help people where sometimes they'll think, well, I give up or I'll just wait.
Exactly.
But information is key. You have the information.
Information is key. Guidelines change all the time, so what may have been a nay could be a yay.
Paul Vincent, Prime Lending. Let's tell people how to reach you.
Sure. 281-827-1139 or email at paul.vincent@primelending.com. 281-827-1139
Thank you, Paul.
Thank you.
And thank you all for listening to Real Estate Matters with Stewart Title. I am your host, Bill Knapik. Simply go to stewart.com/radio. That's right. You can not only hear this show again, you could get the show archives at stewart.com/radio and even see the guests on the YouTube video. It's that simple. On behalf of all of us at Stewart Title, Stewart Insurance, once again, Bill Knapik, together with John Bramlett, we will see you next week, and thank you for listening.